Claude AI versus ChatGPT forecast Bitcoin breakout. Spring tension targets $130,000 peak. AI. Bitcoin. Add disclosure. Add disclosure. We believe in full transparency with our readers. Some of our content includes affiliate links, and we may earn a commission through these partnerships. However, this potential compensation never influences our analysis, opinions, or reviews. Our editorial content is created independently of our marketing partnerships, and our ratings are based solely on our established evaluation criteria. Read more. ChatGPT versus Claude Bitcoin analysis converges on $125,000 to $130,000 target with 65% probability as institutional flows drive 90-day outlook. Add disclosure. Add disclosure. We believe in full transparency with our readers. Some of our content includes affiliate links, and we may earn a commission through these partnerships. However, this potential compensation never influences our analysis, opinions, or reviews. Our editorial content is created independently of our marketing partnerships, and our ratings are based solely on our established evaluation criteria. Read more. Crypto journalist. Hassan. Crypto journalist. Hassan. About author. Anas is a crypto-native journalist and SEO writer with over 5 years of writing experience covering blockchain, crypto, DeFi, and emerging tech. Author profile. Share. Copied. Add disclosure. Add disclosure. We believe in full transparency with our readers. Some of our content includes affiliate links, and we may earn a commission through these partnerships. However, this potential compensation never influences our analysis, opinions, or reviews. Our editorial content is created independently of our marketing partnerships, and our ratings are based solely on our established evaluation criteria. Read more. Last updated. July 30th, 2025. Why trust Cryptonews? Cryptonews has covered the cryptocurrency industry topics since 2017, aiming to provide informative insights to our readers. Our journalists and analysts have extensive experience in market analysis and blockchain technologies. We strive to maintain high editorial standards, focusing on factual accuracy and balanced reporting across all areas, from cryptocurrencies and blockchain projects to industry events, products, and technological developments. Our ongoing presence in the industry reflects our commitment to delivering relevant information in the evolving world of digital assets. Read more about Cryptonews. Disclaimer: crypto is a high-risk asset class. This article is provided for informational purposes and does not constitute investment advice. You could lose all of your capital. Bitcoin is trading at $117,832.50 with minimal daily movement, minus 0.10%, as both Claude and ChatGPT identify a key consolidation phase near all-time highs that could determine the next major directional move. However, they differ in probability weightings and risk assessment approaches. The synthesis of their analyses reveals a 65% probability of an upward breakout, a 25% chance of correction scenarios, and a 10% likelihood of extended consolidation. Current market position and technical structure. Bitcoin's position at $117,832.50 represents what both models identify as a compressed spring setup, trading within an exceptionally tight daily range of just $1,123. 0.95% of current price. The technical foundation remains overwhelmingly bullish, with price maintaining strength above all major exponential moving averages. 20-day EMA at $116,935.93, minus 0.8%. 50-day EMA at $112,724.93, minus 4.3%. 100-day EMA at $107,357.63, minus 8.9%, and 200-day EMA at $100,041.53, minus 15.1%. The RSI reading of 57.61 sits in neutral territory, which both analyses point out as particularly essential given Bitcoin's proximity to all-time highs. Typically, assets trading near historic peaks exhibit overbought RSI readings above 70, making the balanced momentum reading a bullish divergence sign. The MACD structure shows mixed signs with the main line at minus 469.62 below zero, but the positive histogram at 2,330.79 suggests building momentum despite current bearish positioning. Volume analysis reveals daily trading at just 6.59k BTC, representing what both models interpret as institutional accumulation rather than distribution. The extremely high ATR reading of 106,893.57 contrasts sharply with the current low volatility, creating what technical analysts call a volatility paradox that often precedes strong price moves. Historical context and 2025 performance trajectory. Bitcoin's 2025 journey provides key context for understanding current positioning. Starting the year at $102,405 in January, the cryptocurrency experienced a consolidation phase through spring, trading between $107,500 to $110,000 from February through May. June saw a modest close at $110,467 before July's explosive rally to current levels near $119,850 by month-end. This historical pattern demonstrates Bitcoin's ability to break from extended consolidation periods with strong momentum, similar to the current setup. The fact that Bitcoin has maintained its July gains without a major correction suggests underlying strength that both AI models identify as institutional accumulation rather than speculative excess. Institutional dynamics and market structure. Both analyses emphasize unprecedented institutional adoption as a primary bullish catalyst. Strategy's recent acquisition of 21,021 BTC worth $2.46 billion, bringing total holdings to 628,791 BTC valued at $74 billion, represents the scale of corporate treasury adoption accelerating through 2025. The SEC's approval of in-kind creation and redemption mechanisms for spot Bitcoin ETFs eliminates previous operational friction for institutional participants. The JP Morgan Coinbase partnership allows mainstream banking integration, while companies like Smarter Web Company, which has crossed 2,000 BTC holdings, and Canaan are adopting Bitcoin as a primary reserve asset, demonstrating the expanding corporate adoption trend. These developments collectively represent what both models identify as structural changes in Bitcoin's holder composition, creating more stable price floors and reducing available supply for retail trading. Current market metrics support this institutional thesis, with market capitalization at $2.34 trillion and fully diluted valuation at $2.47 trillion. The circulating supply of 19.89 million BTC represents 94.7% of the maximum supply, highlighting growing scarcity as institutional demand accelerates. Social sentiment analysis and contrarian signals. Social sentiment data presents a fascinating paradox that both AI models identify as a bullish contrarian sign. Despite Bitcoin trading near all-time highs, retail sentiment has declined to yearly lows, with Lunar Crush data showing AltRank down 229 positions and Galaxy Score declining 13 points. However, overall sentiment maintains 81% positivity, with 90.98 million engagements and 292.17k mentions. The key insight both analyses highlight is the divergence between institutional accumulation and retail pessimism. Historical precedent suggests that when smart money accumulates while retail sentiment deteriorates, subsequent moves tend to be particularly explosive as retail FOMO accelerates during breakouts. The current social dominance of 19.35% indicates strong but not extreme retail attention, leaving room for sentiment-driven momentum. Recent social media analysis reveals approximately 80% bullish sentiment among active traders, though broader retail metrics suggest caution. This mixed sentiment profile creates optimal conditions for institutional positioning without retail competition, a setup both models view as fundamentally bullish. Regulatory environment and policy catalysts. Both analyses emphasize improving regulatory clarity as a strong bullish catalyst. The pending White House crypto report, though initially not including strategic Bitcoin reserve details, represents progress toward a comprehensive policy framework. The Genius Act implementation and broader regulatory developments provide institutional confidence for Treasury allocation decisions. Recent headlines confirm accelerating corporate adoption with companies implementing Bitcoin reserve policies and expanding holdings. This regulatory clarity removes previous institutional barriers, allowing both models to identify the corporate treasury adoption trend as a primary 90-day catalyst. 90-day scenario analysis. Bullish breakout scenario, 65% probability. Target range, $125,000 to $140,000. Both models converge on this scenario as most likely, driven by institutional accumulation acceleration and technical breakout from current consolidation. The scenario requires decisive movement above 100